Hello, everybody, and welcome back to our new lesson, Algorithmic Mastery. So, our agenda for today, we're going to be discussing market maker models / state of delivery, high probability liquidity pools, macros, high probability trade entries, trade management, and last but not least, the most important thing we're going to discuss at the end because it ties into all of these things that we're going to discuss for today. So I'm super excited to get into today's lesson. Continuing forward, we're going to get right into market maker models. So as everything else in our trading, we want to keep everything as simple as we can. So that's always my aim in my own trading, but also whenever I'm talking to you guys here or wherever you guys have come into contact with me. And that's what we're going to do with market maker models. So this is assuming a sell side delivery first, followed by a buy side of the curve. And as you can see here in the bottom right hand corner, we just want to reverse the logic that we're about to describe when we are bearish. Okay, so again, market maker models are just that. We'll have price going down, which simply put is just sell side delivery, followed by buy side delivery. Okay, so continuing forward, we want to see price go lower, and then assuming we're looking for a long setup or we are bullish, we're going to look at the left side of the curve when we were seeing a state of sell side delivery, and we are going to identify a few things. Number one, utilize SIBIs. So of course, we'll look at examples in the charts, but we want to look at SIBIs or bearish fair value gaps that were used by the algorithm to push price lower. Number two, we want to look and see if there's any first presentation fair value gaps residing within this left side of the curve when we were in a state of sell side delivery. So this could be a 930 fair value gap, the first fair value gap after 930 open. I know some people refer to it as first New York presentation fair value gap. I typically just call it the 930 fair value gap. We have the midnight fair value gap, which is the first fair value gap after midnight open. And then, of course, we have the 130 fair value gap, which is the first fair value gap after 1:30 p.m. Eastern time, all in the 1 minute time frame. And then the third thing we're going to be looking for on the left side of the curve are opening gaps. So this is going to be a new week opening gap or a new day opening gap. So not everything will be applicable for every fractal of price that we are operating within, but just looking for these things helps us just plug in and understand the significance of them if and when they are apparent in whatever fractal of price we're operating within. So when we're in a state of sell side delivery, again, we want to see SIBIs push us lower. We want to see first presentation fair value gaps push us lower if they are present. And the same with opening gaps. We want to see if we get a retracement into a new week opening gap or a new day opening gap on a specific day, that push us lower, assuming lower prices, attacking sell side liquidity pools and other discount objectives. Okay. Now, when we see a turning point and reversals, and we'll discuss how to identify these, we want to look back at the left side of the curve and talk about why these are useful. Okay. When we start to see bearish order flow break down, and by extension, bullish order flow come into the marketplace, we want to see opening gaps get closed above, right? And when they do, we want to see them do what? Provide support. The same thing, because we're trying to keep it simple, we want to see first presentation fair value gaps get closed above and do what? Provide support to push us higher. And of course, utilize SIBIs. We want to see them get closed above, and those will become high probability bullish inversions. And these are arguably my favorite PD array to utilize. But again, we're simply just looking back at the left side of the curve when we were seeing price seek discount objectives and looking for fair value gaps in these three things here to see us close above. So an important fundamental aspect for this to occur and for us to understand and ultimately be able to utilize this in our own trading is that the bodies tell the story. We want to see bodies close above opening gaps. We want to see bodies close above first presentation fair value gaps. We want to see bodies close above utilized SIBIs, becoming a high probability, HP of course, bullish inversion. And of course, we want to reverse this logic when we're in bearish scenarios. So we would look back at the left side of the curve, which flip this would be the buy side. We want to see candles closing below utilized BISIs, below first presentation fair value gaps, below new week opening gap, new day opening gap. Okay, so this is important. And just, again, we're going to look at examples, but really just to be able to read order flow. I spend a lot of time on the 1 minute. We're going to talk about 1 minute structure here today, but by no means am I negating the importance of the higher time frame. That is significantly important, and higher time frame direction, intraday narrative, overarching context. Of course, all that is important. But when we get an understanding of how to read order flow with confidence on the lower time frames, we'll really start to see things click in our trading. So let's continue forward here. And how can we identify a turning point, right? Again, we want to keep it simple. So we know that manipulation, if we're looking for a long, we want to see us run lows, but what kind of lows? Session lows or higher time frame low? We want to see that swept, and ultimately we need to have a reason to expect a reversal back to buy side, right? We don't just see a low swept and then automatically every time expect a reversal back to buy side, right? First and foremost, again, we want to see session or higher time frame SMT when we sweep this. That's best case. It's not necessary, but of course, you guys in your own experience as well, you'll probably see this. We do like to see SMTs. SMTs just add confluence onto any setup and make any scenario higher probability. That's how I utilize them. And we'll see often that this will occur during a macro window, and we're going to dig into this, okay? But before we expect these reversal signatures, what do we need to see? A high probability liquidity pool as our target, or in other words, our reason to get back up, right? Not just to try to call a bottom randomly, but we need to have a reason, right? To say, okay, after we sweep this low and start to see reversal signatures, it is probably suggesting to us that we're going to seek a high probability buy side liquidity pool. Okay. And of course, reverse when bearish. So our number one priority all the time is, where is the draw on liquidity? Okay. Where is the draw on liquidity? Where is price going? What is our bias? Where do we want to see price go, up or down? Okay. So how can we identify high probability liquidity pools and what I often refer to as bias footprints? If you guys are in the group or just have heard a couple of my videos before, I often refer to them as bias footprints. And it's really, really fascinating to see once we get to the chart examples. If this is your first time, it'll probably at least fascinate you. It's so interesting. And once you start to see them in live market action, it is eye-opening and very, very useful. So we're going to discuss it here in a little bit. But how can we identify high probability liquidity pools? Engineered buy side, that's how I refer to it also, are swing highs resting closely below X. Engineered sell side are swing lows resting closely above X. So what is X? A new week opening gap, a new day opening gap, a session high or low, first presentation gaps, key opening prices, and dealing range equilibrium. Now today, with the chart examples, we're not going to go through every single example and look at, okay, there's a high probability liquidity pool in close proximity to the new day opening gap and the session high and the first presentation, all of these. But again, having this fundamental logic that we're discussing here and that we're going to continue to dig into allows us to just plug in any of these for whatever fractal price or intraday session that we are operating within, because we can see these signatures and really get a good idea of what our bias should be. Okay, so let's continue further. High probability buy side liquidity. We're going to stick with the theme of today's lesson, assuming a long scenario. We're reversing any logic for a bearish scenario, of course, that we are discussing here. So it's the same graphic and depiction as before. If we see sell side delivery and we see reversal signatures, we want to see these significant inefficiencies from the sell side leg offer support higher, but we need to have this draw on liquidity clear. So if we have a swing high short of X, that gives us the confidence to expect higher prices when we see these reversal signatures occurring, and ultimately to enter trades down here or within the buy side of the curve. Okay, when we start to see bullish order flow come into the marketplace and bearish order flow break down. Okay, so let's continue forward. And I'm sure a lot of you guys are familiar on this. I'm just going to run through this real quick. But for those who are new, macro power of three, this is the model that we utilize on a day-to-day basis. It is on the 1 minute time frame, and it is extremely precise. It is combining time and price. So of course, the name is not complicated, macro. So we're operating within the macro time windows and power of three. I'll describe this right now. Okay. And then we'll dig into some examples, bringing all these things together. So MO, if you ever see it on my chart, any of our members' charts here, it just stands for macro opening price. So this is a macro window, X50 to X10. So I'm a New York session trader. Often I am operating in the 950 macro, which is 9:50 a.m. to 10:10 a.m. The next macro would be 10:50 a.m. to 11:10 a.m., so on and so forth. So here, with macro power of 3, we want to see certain things occur in order for us to get involved in a trade. Obviously, again, we want to build our bias and have that high probability liquidity pool. But when it comes down to execution, this is going to be our go-to entry checklist. So with macro opening price for a long setup, we want to see this high probability liquidity pool, and we want to see sell side swept here, right? So we want to see price enter the macro window and go below macro opening price. So this is macro manipulation. So again, it's just power of 3 on a micro level, right? So we're going below macro open to sweep a low, okay? We have the high probability liquidity pool intact as our target, which again, to reiterate, is our number one priority, okay? Then we want to see price after sweeping that sell side for macro manipulation, show us a signature that it's starting to reverse, which is our entry. And typically when we go down below macro opening price for the macro manipulation, we'll leave a SIBI here, which I'll typically refer to as a false or fake SIBI, right? Just by extension for macro manipulation in general, typically the algorithm will move price in a rapid manner, by extension leaving behind just a fair value gap from the displacement. But understanding macro power of 3, we're going to continue to discuss, but understanding we have a high probability buy side liquidity pool above and we're running a low, if we see this signature and a close back above that SIBI, it becomes what? An inversion. And that's our signature, because the bodies tell the story, that bearish order flow is breaking down after a liquidity sweep, and bullish order flow should be expected to present itself in the marketplace. Okay, so after we see a close above that SIBI with the inversion, that's what it becomes. That's what it becomes classified as. We can enter on that, and we want to see it go up to our buy side liquidity pool. Now, of course, this is our entry checklist now. 1, 2, 3. Okay, macro window, sweep below macro opening price, inversion confirmation. Okay, simple. Simple, not easy. It comes with time and experience to understand overarching narrative, but once we continue to dig into some of the high probability liquidity pools in the charts, coupled with macro power of 3 signatures and setups, it's really going to start to come together. And then just over time, when you start to see these signatures, you're going to really not be able to unsee it. Okay. So of course, price will often not just run right up there in one single candle or one straight line. Okay, it's going to have slight little retracements. So this is combining what we discussed from the beginning of today's lesson, talking about sell side delivery and buy side delivery, sell side of the curve, buy side of the curve. So we're looking back after we get our reversal signatures between our entry, which is assuming it's this inversion right here, and our target, the high probability buy side liquidity pool. We're looking between our entry and our target at the sell side leg and saying, okay, where are the SIBIs that were utilized to send us lower? Okay. Now, sometimes we will use SIBIs that did not get delivered to if there's no other ones that were used in close proximity. We'll talk about this as we continue this lesson. But we're looking at the left side of the curve and looking for bearish fair value gaps that were used to send us lower. We want to see price close above those SIBIs as confirmation that we are on side, and we want to expect those to support price closing above the next SIBI. Support price, continue higher. Right? Best case scenario, that's what we want to see. That's what I look for in my trading. Okay. So continuing forward, let's talk about our first example. So in the bottom left-hand corner, just so you guys can follow along on your own charts, NQH2025 is what we are looking at. We're looking at the 1 minute time frame, and this is Thursday, March 13th, 2025. So I have this chart backed up right to, I believe, right around 1:49 p.m. Eastern time. So we're in the afternoon session here. And what is price showing us here? It's going lower. It's in a state of sell side delivery. Okay. First and foremost, what did we see it leave behind in its wake while price was delivering lower? A session high short of a new day opening gap. So this is a liquidity pool short of X, as we were describing it earlier. New day opening gap is X. Okay, but ultimately, since this is a session high with the new day opening gap, this is a high probability liquidity pool here. And, add on to it, this high right above it, this is just additional context, right? But this is your 1-2 punch where you see a high falling short of a new day opening gap, a new week opening gap, everything we discussed and labeled on that earlier slide in today's lesson, talking about what X means. Okay, so continuing forward, we're seeing lower prices, and what do we see? SIBIs are pushing price lower. This one here, this SIBI is pushing price lower. And note I have this labeled BPR because if we look to the left of the SIBI, there's a BISI passing through right there. Very, very powerful. Additionally, there's a little volume imbalance here. We need to include that in our fair value gap anchoring. If anyone is wondering why that's dragged to the top there and not the wick, it's because the volume imbalance. Okay, but see how it was utilized to send us lower there. Continuing forward, what do we have here? The 130 fair value gap. So this is the first fair value gap after 1:30 p.m. Okay, and this is a significant fair value gap, significant PD array for the afternoon session. Okay, we're seeing that as pushing us lower there. If we continue forward, what else do we see? We see that we're in very close proximity to Tuesday's low. So again, this is Thursday. So a couple days ago, we're falling short of that daily low, which is significant. Okay, so 149, what does that mean? Right? We're right ahead of the macro window. So shouldn't we expect price to go down there? It could, but what do we need to understand at this point? At that moment, we had an SMT with ES. ES had taken out this daily low from earlier in the week, while NASDAQ was failing to. So we're seeing a crack in correlation ahead of the macro window. So this is how we start to build context, understand narrative, and going backwards before we get ahead of ourselves, we have a high probability buy-side liquidity pool right here. Okay? Continuing forward, what else do we see? We see a sweep of these lows here, these relative equal lows. We see the SMT hold, and we see us enter the macro window, the 1:50 to 2:10 p.m. Eastern Time macro window. Now, on top of the SMT with Tuesday's low, we see an SMT right before leading into the macro as well, which is just additional signature. Okay, so we will look at macro power of 3 scenarios where we have clear manipulation below and a sweep. We'll look at multiple examples of those shortly. But for these scenarios, we should understand that if we have the SMT before, not only here, but with this daily low, it increases the likelihood that we're probably not going to get that. We'd want to see this hold and not get delivered to. Okay, so how can we break down this macro? Price is going above the 130 fair value gap here, okay, closing above. So shouldn't it run? It can, but what is it more likely to do? First, refer back down below macro opening price to a high probability PD array to allow smart money to get involved. Okay, so why is this? HP stands for high probability, of course, plus OB, bullish order block. Why is this a high probability bullish order block? Because it's the last down close candle after the SMT. And note how price comes up, generates these relative equal highs, refers back down to macro opening price, delivers beautifully to the order block, and then it closes above the 130 fair value gap. So after we see the algorithm refer below macro opening price to a high probability PD array, and it closes above, back above, I should say, that 130 fair value gap, the first fair value gap after 1:30 p.m. Eastern Time, then we want to see it function like this in support price. Okay, so what are we doing now? If we see reversal signatures, possible entry here, possible entry here, another entry here. Okay, so why is this significant? Left side of the curve, this SIBI right here. Okay, it was utilized to send us lower. Now, if you're looking again, it doesn't look like this SIBI, bearish fair value gap, was delivered to. But if we include the volume imbalance, we can see it was working the bottom of that 1, 2, 3 times to send us lower. Okay, so again, not only as confirmation that we are on side and that this is likely a move at least back to these internal highs here, we want to see it close above. But if we see a SIBI that was utilized on the sell side of the curve, then it becomes what? A high probability bullish inversion. And we want to see it push price higher to close above the next objective. Okay. By extension, I've discussed this on the channel before. If we have a high probability bullish inversion and a unfilled BISI below, we want to see that left open as a breakaway gap. And I want to discuss this from a different angle that hopefully helps you guys understand this. When we get this close above a high probability bullish inversion and we have this unfilled BISI down below, I want this to remain open because I want the algorithm to tell me it's prioritizing premium objectives over this discount 1 minute inefficiency, right? I want to see it close above the next objective without completely filling this in, by extension, of course, this one as well. Okay, but that's the logic. I want to see what the algorithm, what the market is showing me its priority is. Does it want to go and seek premium objectives and close above the next roadblock, right? The next premium inefficiency from the sell side of the curve, or is it going to come down and spend a lot of time down in here? Remember, breakaway gap is a strong signature of strength, right? So we want to see any signature of strength hold, right? Just like we wanted to see the SMT hold down here. Okay, so at this point, we didn't want to see price return to the SMT swing low here. Then after we see this reaction and close back above the 130 fair value gap, we want to see this hold. Now, after we close back above, we don't want to see us fill in this breakaway gap. So what does that mean? This swing low, best case, gets left undelivered to. Okay, it can return down there. We'd want to see it still left unfilled. Okay, because then it's problematic. If we were to reclaim this SIBI back below, it's problematic and we might have to go lower, right? Continuing forward, what do we see here? Close above that high probability inversion, come back down into it. We leave this open and price is sent higher to close back above the next objective from the sell side of the curve. Okay, so we're just relying on the same signatures again and again. So this is a balanced price range. And again, it's high probability to support price because it was used to send us lower. Now, note this little order block right here. Okay, why is that high probability? Well, a couple of reasons. It's nested within this BISI. And if we want to see this BPR support price on a closing basis, right, and just in general, of course, if we have this order block down here, right here, this is price coming down to a deep discount of this leg from this low to this high, this micro dealing range, to refer back to a high probability PD array. Okay, so we want to see this low remain safe, or a protected low as many people call it. We don't want to see price go down there. We want to see signatures of strength hold. Okay, continuing forward, that's exactly what it does. Then we do get that close above this next SIBI, which becomes what? A high probability bullish inversion. Okay, so we're looking back at the left side of the curve and asking ourselves what needs to be closed above. Okay, first it's this, then we can trail our stop loss to all these protected lows that I've been mentioning here. After we get a close above that next PD array, we can trail tighter. Once we get a close above here, we trail tighter. Okay, we don't trail here because we didn't close above. Once we get this close, then we can trail tighter, etc., etc. Okay, so again, moving forward, what else do we have? We have this SIBI here. We need to see price go close above that. And that's what we do here. Then we can trail tighter to these swing lows here or below this SIBI, which is now a high probability bullish inversion. So see how we close above this SIBI that was utilized to send us lower, high probability bullish inversion against the next objective, right? The algorithm is going to key off these levels. Okay, so going forward, obviously for this, let's go back real quick. We were targeting lunch high. I just want to go into macro power of 3 again for the 250 macro that brought us home here, where we have just a really nice depiction of what is occurring in the market. So see how right before the macro window begins, literally, 1 or 2 minutes, we fall just short of that lunch high for the macro manipulation. So this is what I'll refer to as a bias footprint, and we'll get into this more often. But this is a signature showing you, okay, we're going to go down for macro manipulation one last time, leaving this engineered buy-side liquidity to run lows, manipulate, and then give a high probability setup inversion. A little coloring outside the lines here, but once we reclaim it, we do go higher. But again, note how right at the start of the macro, they leave engineered buy side short of a session high, and ultimately, again, the new day opening gap, expand lower, and then we start to reverse during that macro window. So again, let's take a deeper look into macro power of three with the bias footprints that we were referring to. Okay. Example number one, 3:50 a.m. macro is where we're going to be operating within. Now we're on Friday, March 14th, 2025, NQH 20225. So the next day, but the same market. So what we want to look at here is, of course, macro signatures that we have laid out fundamentally. But we want to also just understand dealing ranges and bias footprints. Okay, it's entry criteria, bias footprints, dealing ranges. Okay, so here I have it zoomed in. We won't be able to see Asia here just for clarity's sake. We have Asia high dragged out here, so that's a session high, which is a high probability draw on liquidity. But internally, we start to see specific signatures that would suggest additional bullish bias. So see how we have this high here, and then right before the start of the 350 macro, we fall just short of that. So we're making internal engineered relative equal highs here, and this is a bias footprint. Okay, so we're leaving back highs additionally short of Asia high, and there's more trendline liquidity. Again, your homework should be go into the charts and see what else you see yourself for these. So that's why I include the date in the market, again, 1 minute time frame. But we're seeing price go below macro opening price to a deep discount of this leg. So when we see expansion leading into a macro window, we always want to measure this leg, because if we see macro manipulation, it just makes sense. We're often going to want to seek discount for a long scenario. We come into a deep discount here. We have an SMT during a macro, an extremely powerful signature, and then a close above this SIBI, which is a high probability bullish inversion because of the SMT, sends us higher. We're looking back at the left side of the curve and looking for SIBIs that were utilized to send us lower. What do we see here? A SIBI utilized to send us lower. Once we close back above it, what happens? Support, support, Asia high. Okay, so note again, at the start of the macro, price came down and was seeking discount. After the SMT is when we saw the close above and the move here. Okay, continuing forward, same day, 1050 macro, NQH 2025, 1 minute time frame. So we're going to be looking at the 1050 macro and really some of the 950 macro what occurred, where we did see the low day occur right at 10 a.m. for the intraday session. We had 10 a.m. news, and let's talk about the opening range. So we're seeing price go higher, and then it starts to come down. And again, at 10 a.m., that red folder news dumps us. And what is it doing? Sweeping a session low during a macro. Okay. But going back, most importantly, what is it leaving for us? A high probability buy side liquidity pool, 2 session highs. So we have this high here, which is the opening range high, just short of the previous day high. So whenever I see this occur, it's really hard for me to want to short after I see these signatures, and we have these signatures and bias footprints above market price, because I know how often they are drawn to as our draw on liquidity, right? I'd rather just wait and be okay with missing any sort of sell-off and wait to see if I get a clear long setup. Okay, so coming into here, we see us run these lows. We have a clear buy side liquidity pool here. We're chopping around, and we're respecting an old new day opening gap from March 10th here on a closing basis, working along with the 9:30 open, midnight open, et cetera, et cetera. And then we start to do what? See candles closing above key PD raise. So with this candle's close, we're closing above today's 9:30 fair value gap, this purple box, and also yesterday's 9:30 fair value gap. So this is an extremely significant area in price, and it also just gives us additional context onto why this 1 minute BISI right here should support price, because it's overlapping with these two important PD arrays, 9:30 fair value gap and previous day 9:30 fair value gap. Okay, so as we continue here, we're entering the macro window, and most important thing we want to ask ourselves is, do we still have buy side liquidity intact here? Okay, do we have a clear draw on liquidity? Yes, we do right here. Leading into the macro window, we start to see this micro dealing range be created right here. Okay. So as we mentioned in the previous example, we want to measure where discount and premium is. So if we see that macro manipulation, we understand it's likely to go down to a discount. So this is our dealing range low. And why can we utilize this as a dealing range low? Of course, swing low, but it's delivering out of these significant 930 fair value gaps. So we want to see this signature hold strong. We don't want to see price go down there. Okay. And if we start to see us run internal sell side in this micro dealing range and then reverse, it's a signature of strength because the algorithm is just telling us, oh, it doesn't even care to go down to the larger discount of this whole dealing range here. Okay, but what do we see again? Similar to the first example from today's lesson, price is going below macro opening price to run a low and seek a high probability order block in a discount of the dealing range. Okay, so bias footprints, macro power of 3. Bias footprints, macro power of 3. Rinse and repeat, rinse and repeat. Why is this a high probability bullish order block? It's nested and delivering from that 930 fair value gap and yesterday's 930 fair value gap here. Okay, along with this fair value gap here, just as additional context. Okay, so really good move. And once you get that close above the SIBI here, that's your confirmation that this was manipulation, and now that quick bearish order flow is breaking down and we're going to resume higher, and that this was macro power of 3. Very, very nice setup. Let's continue forward and look at another example. Same day, next macro, 1150 macro. Okay, so there's 2 dealing ranges on the chart here. We have a refined dealing range and the larger dealing range. And I'm going to break this down. So we're seeing higher prices. Okay, the intraday direction is bullish. Okay, so the larger dealing range is this low because we have this clear fair value gap here that we delivered from. This is the larger dealing range. And then we make a short-term high here as we head into the macro window. So again, I want to use both of these dealing ranges in specific ways. Okay. If we start to see a deeper retracement, we have to look at sell side objectives in a discount of this larger range. Okay, and what do we have? This low here. Okay, now on top of this, which makes this acceptable for a short setup, is this bias footprint right here. You see this label, this arrow pointing there. Why is this a bias footprint, a high probability liquidity pool? See how this is falling just short of equilibrium of the dealing range? That shows me that this is suspect here, that this is likely to get returned to. Whether or not after that we purge it and continue higher is a different story. Okay, and this is why we take partials. This is why we move stop to break even, things of that nature. Okay, but if we understand that this is a high probability liquidity pool and we're building a sell side dealing range here, I'll call it that, right from this leg, this retracement, we want to see how we act, especially because we're in a macro window in a premium of this range. Okay, so macro opening price, we're going we're going above macro open into a premium and efficiency here, and we see that macro SMT again, which is such a powerful signature. NASDAQ is making this higher high here. S&P is not. Close below. High probability bearish inversion. Why? It was a BISI utilized to send us higher. We get below, it's going to send us lower. Okay, and again, like we discussed in the first example, if we have we're just flipping the logic, if we have a SIBI above a high probability bearish inversion, we want to see that remain open as a breakaway gap because, of course, it's a signature of weakness when we're bearish, but we want to see the algorithm show us it's prioritizing discount objectives over premium and efficiencies. Okay, we close below another high probability bearish inversion here, taps it to the tick and delivers lower. Now, ultimately, we did not come down and get this here, right? So again, to reiterate, this is why, especially when we're playing counter to the intraday trends, it's important to take partials and move stop to even and trail stop loss. Manage your trade responsibly when we are getting this retracement. Okay, but with this low here, it's reasonable to expect this as an additional draw if we have a runner here, because if price is going to want to come down to equilibrium, okay, not only purge this, this is the next clear swing low. Okay, but note how we worked this deal, we created and then worked premium of this refined dealing range before displacing lower to the discount of the larger dealing range to internal sell side objectives. Okay. Continuing to our next example, we have another bias footprint. Now, this was, of course, it's the same day, the 2:50 p.m. macro. And the previous example, as I mentioned, is against the intraday trend. So this is in line with the intraday trend. So this is the better scenario when it's in line with the intraday trend. And we see price continue higher, continue higher, continue higher. Okay. And then what is it doing right before the macro begins again? Okay. It's leaving a high just short of a session high, which is lunch high. We start to retrace. We're going below macro opening price to run a low and deliver to discount of a dealing range. After that is occurring, we're looking for confirmation that bearish order flow is breaking down. Okay, that occurs right here where this candle's close. We have two consecutive SIBIs. That becomes a macro bullish inversion, but also little additional signature that I'll cover more deeply in another example. I know you guys in the group, we've been discussing reclaim fair value gaps left and right and how useful they are. But with here, when we have this inversion and we have a BISI overlapping with it that was utilized, this candle's close is very significant. And this is when you're going to get the best entries for macro power of 3. Okay, but this candle's close shows us that bearish order flow is breaking down simply, and that bullish order flow is being reclaimed because this was a BISI. Okay, after macro manipulation. But again, note the bias footprint. Right before the macro window, we are falling short, engineering buy-side liquidity one last time before macro manipulation and actually delivering higher to it. Okay, so a lot has been discussed here, and I want to talk about the most important thing bringing all this together, and that is our expectations. Okay, our framework for our trading, it's not trying to be wizards, be madmans, be, whatever, use every single concept. We need to understand again that less is more. And I say this, and I just spoke about a lot of things in this lesson, and especially if you're newer, still getting your experience with ICT concepts in general, it's going to seem like a lot, but trust me, over time, if you keep showing up and keep studying, you're going to see these things and they're going to be second nature to you. Okay, so number one, draw on liquidity is our number one priority. Okay, if there's no clear draw on liquidity, we don't take a trade. Okay, so we want to wait for clear bias footprints, right? If you're having trouble, I'm always offside, I'm always in a short when the market goes up, or I'm always in a long when the market goes down, just trade less and wait for scenarios like the examples that we showed today where we're seeing a high fall just short of a session high, retrace into a macro, because it shows you what your bias should be leading into that macro window. And just in general, if we have those relative equal highs above current market price or relative equal lows below current market price. Okay, on top of this, and this is important, right? Especially, if you're just going to start trading macro power of 3 and you have your first win or first set of wins, or you start to just study and see it, just like every other model, it's going to fail sometimes. So you need to still have reasonable expectations, manage your risk, don't go crazy, right? And understand that every macro will not provide a high probability setup. So what does that mean? Patience is our greatest strength. Okay? Patience, patience, patience. If we can master the in-between when there's no clear setup and no clear draw on liquidity and only execute on high probability setups, your trading will transform tenfold. Okay, so we want to pass on lower probability setups when there's not a clear draw on liquidity. And we also need to understand that the best setups, everything we discussed today, high probability liquidity pools, managing a trade with sell side delivery, buy side delivery, market maker models, everything with macro power of 3, the best setups will be in line with the intraday direction. Okay, so I hope you guys enjoyed this video. Leave any questions below in the comments, and I will talk with everybody soon.